Hi traders, welcome to the Ken Tank, where you'll learn how to avoid getting eaten by the sharks on Wall Street. It's always all information for educational use only. I'm not making advice about what to buy, sell, or hold. Hello active traders, this is Ken Calhoun, president of Day Trading University and TradeMastery.com, coming at you with another helpful lesson for how to exit your trades this time for both day and swing trading charts. Let's start off with a quick quiz question here. Let's say you're in Momo, which is one of my favorite momentum stocks this last couple of weeks. I've been alerting my members to this in my various services. How would you manage an exit in this trade? Let's say you're swing trading. So MOMO the ticker, and so let's say you're long and it's currently up here near 24.5 or so. Where would you trail a stop or set your initial hard stop to lock in a profit? Personally, what I'd be looking for is a loss of support of this shooting star. So anywhere under, say, 2370, 2380 would be a good place to exit the trade because of the obvious shooting star. One professional trading strategy that you may find especially helpful is to wait until after you see two red candles and then exit if you lose support on those two red candles. So we don't see that yet in MOMO, but let's take a look at an earlier chart. The ticker is TWLO in this one. What do you notice about this chart? What I notice is that not only do we have a nice breakout, but the two red candles that I want to draw your attention to occur right here. Now, I speak on this topic when I do presentations for Money Show and when I publish my industry articles in Technical Analysis of Stocks and Commodities, but this is a really good classic reversal pattern. Even if there wasn't a shooting star, which is the obvious sell on loss of support of the shooting star pattern, what you find is you may miss that exit. Maybe you're still long and you're on taking a day off, or you don't see that chart until it's starting to drop here. Now what do you do? Well, I use a loss of the aggregate 2-day support line on that. So for example, you have two red candles. You get out if you start to lose that two red candle support right here. And the way I do that is for my swing trades, I'll put a sell stop order in at just under two sequential red candles in a row. And that's often a really good place to exit. Now, if we go back to this MOMO chart, you can see it's a nice breakout. Let's pull up a closer 15-day chart pattern. And one of the strategies to look for in this, again, is a loss of 2 days of support. That's the price that proves a long wrong, in my estimation, at least in my own experience as a trader. So if you lose 2 days of support, that's usually a good place to tighten up an exit and take profit, or set an initial stop. Let's say if you'd bought up here, that would be the initial stop loss value would be right under an aggregate 2 days in a row. The reason for this is because if you lose 2 sequential days of price action support, that may well be a reversal of trend, and that's a good time to get out of the trade. A good professional breakout trader, I will tell you, you can always get back in if they come back in above new highs. The problem that a lot of traders face is they will stay in a losing trade far too long. So what I found the hard way is that if you have 2 days, always follow that, and if you lose support in that, that's a good place to exit an uptrend. Here's one final swing trading chart example in NVIDIA. This is one that my Swing Scans members had been getting alerts from me on the way up. And where would you exit the trade? Let's say you're long up here. Let's say you're long right on this day. What would be my 2-candle reversal exit? Remember, this is important, it needs to lose support under 2 red candles in a row. Okay? And I discount very small doji type candles like this one. Well, something with some kind of sign of a whole real body. So an exit would not be here because we didn't lose support there. See that? Gonna make mental note that that would be a first place you would set a sell stop order, and if it did lose support there, it didn't. Where did it lose support? It would be right up here. So we have 2 red candles in a row. Here we have 2 red candles, never lost support. Here's 2 red candles in a row, and we lost support right there. So that would be a good place to take profit and exit the trade near $62 a share. You can see even if you stayed in it, it's still such a strong stock. It's kind of just gone sideways ever since and may well continue on up. But personally, I like to use more of a hit and run entry and exit strategy. So if I say buy a cut pattern breakout down here near say 48 or 50, I'm fine taking some small profit if it gets up to exit target near 61 or so. That's a good 10 or 11 point round trip for a swing. Or even if you get nervous and you get out because you see 2 red candles, that's still a good entry and exit. So remember this pattern. 2 red candles proves the trend wrong, at least for a short-term swing trade of up to 2 or 3 weeks in duration. So whenever I see 2 red candles, I'll set a sell stop order right underneath that, and usually that'll get taken out. And that's fine, I'm all cash. I can go back in if it takes out new highs up here, but in the meantime, you get in, you get out, or you get in and you let it ride, and then you get out, but you make sure you use 2 red candles, a loss of support, as a kind of a red flag or a warning sign that price action may be about to either consolidate or drop back down against you. Let's wrap up with a day trading example, and this is in MOMO again. It's such a good breakout swing and day trading instrument. Where would a 2 red candle reversal be on this chart? Let's say you'd bought the first sign of a breakout Friday, September 2nd in MOMO, right above the first green candle, which is good for a day trading 5-minute pattern. Anyway, let's say you got in long there and it's starting to run up. Where would be a loss of 2 red candles? We don't get the entire high, we don't get the entire bottom, we get the piece of the middle. So we get in here, 2 red candle reversal would be right here. Right, a lost support right there, right near 24.85. So in at 24.30, out at 24.80. That's a good 50-cent round trip, and that's why I like this instrument so much, and others like it in the $20 to $50 a share range that have a decent trading, 1-point range. Or in this case, we've got a 23.90 to 25.60, so over a 1.5 range to work with. The round trip is from here to right there, right? So we don't get the exact top, we don't get the exact bottom. We trade the first sign of a breakout, and when you see 2 red candles, that should tell you to start considering going back to cash. Now, ultimately, it did keep going back up, so there's that. But it was a pullback in an otherwise strong uptrend. But that's fine for a round-trip day trade. And don't beat yourself up if you get in at 24.3 and get out at 24.80. I'll do that all day long. I don't worry about getting the exact top or the exact bottom. I just want a good 30 to 50 cent run in the middle piece of the range. So that visual pattern may help you learn how to exit your trades correctly. Let's now zoom into the 1-minute candlestick chart, which is the one that I actually use in my trades. The 5-minute there is a good pattern one to look at, but I use the close-up 1-minute advanced chart in my eSignal charting platform. I love eSignal charts, they're the best. And anyway, so you got a bullish cup. Let's say you bought the high above this. So let's say you got in here, over here, and it's starting to run up. Well, let's say you got the pivot. Did this lose 2 red 1-minute candles? No. Kind of hammered out a little low in the pullback here, but it did not lose support subsequent to that, so we'd still stay in the trade or initiate a new trade if you're late. Now we're skyrocketing on up from 24.6 to 24.9. We're getting right near a whole number. Now I teach traders in my livetradingopen.com live trading room the last 16 years. We always use whole number, and I like to sell into whole numbers. I'll often tell my traders, hey, if you're a new trader, sell it all here at 24.90, take the money and run, because we're getting close to a likely resistance area. So it's always a good idea to make your round trips kind of live and breathe within whole number point ranges. But even if you're more experienced and you're still staying in, and it continues the madness on up to new highs. What do we see here? Well, that would be a bearish engulfing pattern. So for the fellow candlestick traders, and learn candles from Steve Nissen because they work great. Anyway, you got 2 red candles here. Loss of support of this one is both a candlestick exit signal as well as my Western technical use 2 red candles, a loss of those to get out of the trade. So what does it do here? It still stays alive for 3-4 minutes. Uh-oh, looks like it's going down. Houston, we've got trouble. What's happening? Oops, there we go, and then we get out. So we lose the 2 red candle support line. Does everybody see that? It's really important that you use this for both day and swing trades. Just horizontally mark that out. And a loss of 2 red sequential, either 1 or 5-minute candles or 2-minute candles, whatever time frame you're using, a loss of 2 reds is the reason to vacate the trade and go back to cash. So you lock in a gain before the market takes it back. It's so important that you focus on your exits, right? So when you're day trading or swing trading, make sure that you have a clearly defined exit plan. And the way that I do this, at least in my own real money trade account, is in my interactive brokers, I'll put sell stop orders in. So immediately once I get a fill, I put the initial sell stop, and then as it runs up, I will manually tighten up the trailing stop. And if I see this candle pattern flash, where you see 2 red candles in a row like this, I'll automatically put the sell stop order a few pennies under the 2 red candle bottom to get me out of the trade. That way I can be off trading something else, and then it fills 5 minutes later, 6 minutes later, and I take my profit in the trade from the breakout, and I'm all done. So that's a good, sensible approach for professional trading. I hope it helps. This is Ken Calhoun, the original Day Trading University, coming at you live here from Colorado in the United States of America. Anyway, look for 2 red candles. That's a loss of the second of 2 red candles in a row is a good time to go to cash in any trade, whether it's a day or a swing trade, so you can identify the very strongest breakout patterns and then take profit in those before the market pulls it back. So anyways, best wishes for success, and I'll see you in another episode. So until next time, best wishes for successful active trading from me, Ken Calhoun, at Day Trading University and Trade Mastery. Make it a good one.